Hey, what's good, everybody? Today we are live to talk about building credit, and I know I kind of randomly do this one on you because I did not actually plan on going live tonight, but here we are. So, any of you guys that are here joining me today, I thank you for randomly spending this time with me here to learn about building your credit, and learn about the right way of doing it because I see so many people doing it the wrong way, and they really just end up wasting their time and not really getting anywhere with where they were attempting to go in regards to building their credit. Uh, you're welcome. You're welcome. Thanks for being here. If you guys are here in the chat, make sure that you do hit the thumbs up for me. It only takes like half a second, from your life just to go ahead and hit that thumbs up button. It'll help YouTube to show this video to more people that also need this information so that they can get it too. So make sure y'all go ahead and hit the thumbs up for me, for your boy, so that we can get the likes up and get more people into the room. And again, we're gonna be talking about different ways. I'm talking about the best ways to build credit and not end up wasting your time because there are a lot of tricks and methods that I hear people out here telling people to do, and they're taking all of these actions that's going to actually lead them to no extra benefit. And I don't want you guys, wasting your time. I want you to be as efficient as possible when you're trying to do something like build credit because you can't afford in most cases, especially if you're trying to achieve something like you're trying to buy a car, you're trying to buy a house. Some of you guys might not be trying to buy a house in this current economic environment, but you guys are probably trying to get ready for that time when it is time to buy a house. And if that is the case, you want to be being as efficient as possible and maximizing your activity, in within the time frame that you probably have before you need to use your credit for something, because you guys don't have time to wait, wait around playing with your credit, waiting for it to improve. You need it to improve as fast as possible. So, of course, that's what we're going to do today. That's what we're going to talk about today. Now, I just want you guys to know when you see me looking to the side, I can't see the comments over here. I got them over here. So I'm looking at you guys' comments when I am looking over here. So, I appreciate you guys for being in here today, and I appreciate you guys for the likes. I see you guys have thrown a lot of likes out there. I really appreciate you guys for that. If you guys don't know me, I'm Will Frazier, your credit and business expert, and I bring you tips to help you get to the better side of credit and get you out of credit jail, so that you can get those things that you need for yourself, for your family, or for your business, whatever the reason may be. But let's go ahead and let's start talking about some of the things that you guys need to do in regards to building credit in the fastest and most efficient way. Now, make sure that you guys, if you have any questions, you leave them in the comments, and I'm going to get to those and try to answer you guys to the best of my ability. But first off, in getting started, let's talk about some of the things that you guys shouldn't be doing in regards to trying to build credit based on some of the tricks that I have heard that are out there. So one of the things that I've heard that you guys should be avoiding is trying to make multiple payments within a month or within a week or within a day. I've heard all three. So I'm just here to tell you now that is not going to be the thing that is going to help your credit. Now, why have people told other people that they should be doing this? Well, they said because they want to build up good payment history. So they think by adding extra payments, by making extra payments, they're adding extra payments, and giving their credit score a boost by doing so. So let me be the first to tell you that that is actually not going to benefit you at all. So you're going to be making all those extra payments for absolutely no reason. If you go, you don't have to listen to me. If you go to your credit report and you pull up any account on your credit report, you will see that for each account, they have a 24-month payment history. In some instances, depending on what kind of credit report you're looking at, you might see more than 24 months, but usually you're going to be seeing 24-month payment history. Now, in that 24 months, it's only showing you just that months. So it'll only show you what you have paid in January, February, March, April, May. It doesn't show you how many times you have actually made a payment within that given month. It only shows you if you were on time making your payment for that month. So again, that is completely false. If anybody told you to do that, don't waste your time doing that. It's not going to help you. Just make your regular, on time payment for that month based on what your credit card or loan person, whatever that company told you your payment date was on the statement. That is when you need to make the payment. Now, of course, if you don't pay it on that date and you do pay it a little bit after that date, it's not going to be a 30-day late that's going to hit your credit report. That doesn't happen, of course, until you're 30 days from that date that you were supposed to pay. So, of course, you don't want to do that either. But at least make the payment sometime around the due date for your payment so that you don't get behind, and so that you can, make sure that you build that good payment history, which is 35% of your score. So it is definitely very, very important. Now, oh, and also, you guys pay attention to these things that I'm telling you. If you have been trying to work on your credit yourself, and you have seen that while you're trying to work on your credit yourself, that you have come to a point where your score has increased, but it's moving kind of slow. Usually, this building credit area, this is the area that you need to focus on if you have reached a level of stagnation while you're dealing with your credit score, trying to improve it. So make sure you're paying attention for that reason. And when it comes to building credit, we are solely talking about you having good accounts on your credit report that you are paying on. This does not deal with charge-offs, collections, increase. This doesn't deal with any of that when we're talking about building credit. So we are solely talking about you having good accounts that you are using, that are open and active to help to improve your credit score. If you have none, which some bad advice that I see people get is they were told not to get credit cards, right? That is some bad advice that people get. If anybody has ever told you that you should not get a credit card, at whether it be your mom, your uncle, your auntie, whoever it is, your cousin, somebody told you to stay away from credit cards when you were younger. Let put that in the comments if somebody told you that you should stay away from credit cards. Because I'm curious to know, because in my experience, most people have been told to fear them, like the plague, and to stay away from them. So I'm curious to see what you guys have experienced in that regard. But that is one of the major things that people tell other people not to do, and it is definitely not something that you want to adopt in your credit building habits, or in anything that you're doing in regards to your credit, because there are plenty other benefits with credit cards even outside of actually building credit and whatnot. So outside of that, another thing, most people are steered towards getting loans to try to build up their credit history. This is one of the major things that people get steered towards doing. And I'm going to tell you now that it's not the best thing for you to do. There are several reasons for this. And I tell people that they should be using, credit cards versus loans anyway. And I'll tell you why in a minute. But basically, the reason why you don't want to use a loan to build up your credit is because every account that hits your credit report affects you in more than one way. If you've seen the credit pie chart, I'm sure pretty much everybody has seen the credit pie chart. It has those 5 different areas. It has 35% payment history. It has 30% on debts owed. It has 10% on the age of your credit. And basically, two other areas. So that is, I'm sorry, I think 15% is actually the age of your credit, but they have two other areas. And basically, the two most important areas that we're going to be dealing with here is going to be the amount of debt that you owe, 30%, and the payment history, which is 35%. Now, when you are looking at that, what's important about that is going to be this. When you get a loan to try to build your credit, what's going to happen is is going to, of course, hit your credit report maybe 30 days after you get it. Usually, your credit score is going to drop when it happens. And you're trying to build credit. You're trying to get your credit score to go up. So as soon as you get this, your credit score is going to drop, take a hit. It might be a small hit. It could be a big hit. Depends on the makeup of your credit report at the time that it hits. But the most important thing to know is that my first time hearing about the credit pie chart. Oh, I didn't know. I didn't know you didn't know about that. So it's basically 5 parts. If I could pull it up for you on the screen, I would. But it's 5 different parts. It deals with your payment history. It deals with the amount of debt that you owe. It deals with the average age of accounts on your credit report. It deals with new accounts and inquiries in one particular area, and it deals with the mix of credit. So having different types of accounts on your credit, like a loan, a credit card, a mortgage loan, having different types of credit is also something that's important when they are calculating the score. So those 5 areas are the service level percentages that FICO uses to calculate your score. It's way deeper than that, but that is the surface level of it. And I'm not gonna bore you guys with the stuff that's that's deep down into it because you probably don't care to hear that, especially not on this video anyway. But um, that's what they are looking at, and that's why the things that I'm about to tell you are important in regards to why you want to use something else other than loans to build your credit. But again, when you use the credit, when you get a loan, it will hit your credit report, and it hits your credit report and it drops your score. Now, why does it drop your score? It drops your score because the average age of your credit of accounts on your credit report have now been lowered because you have a new account. That's one part of a reason why it drops your score. The second thing is that it shows up as more debt on your credit report, so the balance owed. And the way that they're calculating how much it's going to affect you is the balance that you owe on that loan versus the original amount that you took the loan out for, and that will show up as high credit on your credit report. So as the actual balance starts to lower versus the high credit on your credit report, which tells you how much the loan was originally for, your credit score starts to get better. It is not a extreme difference that you see in that area of debt that you owe on that loan. So it doesn't cause an extreme effect as far as changing your score when that balance is low, but it does help you score as you pay that down. But initially when you get it, it hurts your score in those 2 ways. And that's, 2 reasons why they aren't the best thing to use to build credit. Now, while you are paying that on time, it does help you build up a boost in the payment history area, which is 35% of your score. So that is a good thing that is helping you with that. But initially, when you get it, it hurts you. Now, outside of the fact that it hurts you when you initially get it, you start paying it off. And it starts to, start to help you a little bit more because that balance is getting lower. Now, as that balance is getting lower and you actually get to the point where you're about to pay it off, here's where another problem comes. You've paid off the loan. Now, on your credit report, is going to reflect probably the month after that you've paid off the loan. Now, the account closes and then your credit score drops again. Why does your credit score drop again? Because anytime you close open accounts, it's going to affect your score like that, because the benefit that you were getting from the area where you had a low balance versus the amount that it was originally for, showing that you paid that down, now you get no benefit in that area. Some people will tell you lose the age of that account once it closes. That's not true. The age doesn't change. The age that you open up, the date that you open up that account is still there. So it doesn't do anything to the age of your account. It's because you're no longer getting that benefit of showing that you paid down debt because the account is closed now. So that's the other reason why having loans and using them to build credit is one of the most counterproductive things that you can do. Now, a car loan works the same way. Usually, if I see a person has actually paid attention to their credit report and their score before they pay off their car loan, right after they pay off their car loan, they see their credit score drop. Now, you can tell me, in the comments if you guys have paid attention to that and saw that happen or not. But that's what usually happens because of how the loan ends up affecting you in regards to your credit score. Now, taking that into consideration that happens, you're still going to have to get a car loan. Everybody, unless you got money like that you can go ahead and pay for a car in full, that's great. But most people are going to have to get a car loan, so you're going to have some type of loan on your credit report. My point is not to say don't get a car loan. My point is to say that if you're trying to build credit, you should be using a different tool versus using a loan, because usually people go to their credit union, they go and get one of those secured loans with their own money, and then they get that, they pay it back over time, and then they pay it off, and then they go back and get another one, and then they go back and get another one, and then they keep going in the cycle of getting something that drops their score initially, paying it off, seeing some benefit possibly, and then paying it off, and then it's dropping their score. So from the beginning and the end, it's hurting you. So it makes no sense to continuously do that when there is a better option that you can use to actually build your credit. So again, we want to use a different option other than the loan for building credit. Now, what is that option going to be? What should you do in order to build credit? Before I tell you exactly what tool to use, let me tell you that any tool that you're using to build credit, you want to make sure as much as possible that you are getting an account that reports to all three credit bureaus. Why is that important? Well, because if you're getting an account that reports to all three credit bureaus, then you are going to make sure that everything that you are doing to actually improve your credit is reflecting on all three credit bureaus. Again, why is that important? When you go and try and apply for a credit card, a car loan, if you need a personal loan, or a mortgage, well, not with a mortgage, that's a little bit different. But when you're trying to apply for these things, you never know which credit bureau the lender is going to check. All lenders check different credit bureaus, and you might not know before you apply. So if you have been doing things to try to improve your credit score, you need to make sure that all of that good activity is being reflected on all three credit reports. I call it, killing three birds with one stone. So you want to make sure that you're doing that as much as possible. Now, if at the very least, you probably want to make sure that you are getting it reported to at least two of the bureaus. So that way you have a 2 out of 3 chance of wherever is being checked that you have your good information, your good payment history reflecting on a bureau that is likely to be checked by whatever lender you're applying with. Now, I said the mortgages were a little different. The reason why the mortgages are a little different is because they check all three of your credit reports. So if you're the person that's on here because you're trying to build credit to try to get a house, then you definitely want to make sure that you are building credit in a way that's going to affect all three of those bureaus. And even in some instances, if it reports to two, it can still be helpful because they go with your middle score, meaning whichever credit score numerically is in the middle out of the three, that's the one that they're going to say is your score. So if you get at least two of those bureaus high enough, then that's going to put you in the best position to still have, a high middle score and still be able to, do what you're trying to do as far as a home loan goes. Now, this is what you want to do. This is what you want to be thinking about before you actually try to go and apply for something. This is one of the reasons why people have done all this stuff to build their credit. Then they go try and apply for something and they have no clue why they got denied because they was like, hey, I was doing all this good stuff. I saw, some of my scores improving. Why did I still get denied? Well, it's because you did all this good stuff and it wasn't in the right place for the company that you applied for whatever you're trying to apply for to see it. And that's the reason why. Now, this is new information to a lot of you guys. Let me, put in the comments if this is new information. If this is something that you've heard before, put it in the comments as well so that I can know that. Just trying to get a gauge on, if this is new information to you guys or not. But yeah, you definitely want to think about that before you try to get started in any regard in trying to build credit to make sure you're maximizing your efforts and not wasting time, and then have to go back and try to get another account that does report to all three, or that reports to the bureau that you don't have information on. You don't have to go back and do that if you think about this and intentionally focus on it when you're trying to build your credit. Now, you know what to look for in an account that you're trying to build credit with. So what's the best option to build credit with? We already talked about that. It's going to be a credit card. Why is a credit card going to be the best reason, going to be the best thing to use in regards to building your credit? I told you with the loan, when you actually use that, it's going to hurt you when you initially get it, and it's going to hurt you when you pay it off. The credit card is the exact opposite of that. With the credit card, as soon as it hits your credit report, it will show up and actually give your credit score a boost, especially if you have not had any credit card on your credit report before. Usually a credit card is the missing piece to getting your credit score high, especially for those of you who have been told that you don't need a credit card and to avoid the credit cards. As soon as you get that credit card, you see that that's the missing piece that your credit more than likely has been asking you for, begging you for. And then you see that benefit in your score. I've seen people get 30 points, 50 points, 90 points just from getting a credit card. So, I'm gonna talk about, you know, best cards to get in just a minute, but that's why you want to get a credit card. Now, again, as soon as you get it, the reason why it helps your credit score so much is because it shows up on your credit report as a balance. And this is the 30% area of how much debt you owe that this is affecting. It shows up at a zero balance, and it shows up with a credit limit of, we'll say $1,000. So that shows up as you owing zero debt. So it's the equivalent to having almost a loan that has been paid down completely, but it's still open. So because of that, it shows up on your credit as no debt owed with a lot of money available to you. That is actually favorable in the scoring algorithm. So that actually gives you a big boost because of that. And also, I mentioned that loan balances, even when they go down and help you, they don't affect your score as much. Credit card balances have a very high effect on your credit score versus a loan, way higher. So that's why you see more benefit as well from the credit card having a lower balance. Now, of course, if you increase it past a certain threshold, then it will start to drop your score because now you're adding that to your credit report, which is why another bad thing that people tell people to do is to get a credit card, max it out, then start trying to pay it off. That is the worst thing that you can do. Especially, well, it's a good thing if you want to try to get yourself in debt anyway, but it also drops your credit score because that shows up just like a loan would when it first hits your credit report. It's not going to benefit your score in any kind of way. So you definitely don't want to be doing that when you're trying to build credit. So what you do want to do is try to keep your credit card balance at the most at 10%. Keep it at 10%. I'm sorry, at the least, keep it at 10%. That's where you ideally want to be, your balance versus your credit limit. You definitely don't want to go any higher than 30% of your credit limit as far as your balance goes. Now, again, this is not swiping your card. This is the balance that you're carrying. So make sure that you keep in mind those thresholds while you're dealing with building the credit using the credit cards, and you will keep yourself out of debt, and you will actually keep yourself in a good place with your credit score. And one thing I tell people to use your credit card for is to pay bills that you already know that you pay every month with cash. If you do that, then you know that you're not going to put yourself in debt because you're just paying stuff that you already pay anyway. You're just building your credit while doing it at the same time. And for those of you that have good credit and you have a credit card that has a lot of points and stuff like that, then you are actually getting points for doing something that you already do every month, which is paying your bills and just paying it off from your credit card. So you're helping your credit score, you're building credit history, you're getting points that you can use for travel or for gift cards to give to other people, or to use for yourself. So you're rewarding yourself for building your credit outside of building up your credit score. So that's something else to keep in mind when you're trying to build credit, and why credit cards are more beneficial than using a loan. So keeping that in mind, like I said, that's why the credit card is going to be better than the loan, and also because when you do pay off that credit card, it will never close on you. The only way that credit card will close will be is if you had it at a retailer and you actually stop using the card, and you haven't went and bought anything in a year, sometimes 2 years. They close the card because it hasn't been active. Now, them closing that credit card will definitely hurt you, and that's also another thing you should know. Never close credit cards because they can hurt your score, and that's why you want to keep them open. And that's why having credit cards more so with banks that are outside from a retail connection or affiliation is going to be better because they don't automatically close. Usually, you have to go and close those. And other than that, they'll stay open forever. And that is what you really want to do. Now, in the beginning phases, if your credit score is low and you have to get accounts that will actually have high interest, you might be scared of getting a card because of high interest. One thing I'm going to say to you about the high interest is, even if the credit card had 50% interest rate, you can still get that card. Now, I know that might sound like some horrible financial advice, but let me tell you why I'm saying that. The reason why I'm saying that is because if you use the strategy of paying off your credit card balance, and in this instance, of course, you're not maxing out the card, you're not going above 10, maximum 30% of the credit limit, so you shouldn't have a very high balance in that regard if you're following that. So if you pay off the credit card balance within the time frame, they give you a grace period, usually at least it's 25 days, at most 30 days, that different credit cards will give you. If you have paid off the balance at that time, then basically you're not going to have to pay interest. They're not going to add interest. They only add interest if you carry a balance beyond that period, that grace period that they give you to avoid the interest. So that is the simple way to, no matter what the credit card interest rate is, if you have challenge credit and you're trying to do something to get it up, then you need something like a credit card to help you with that. So don't let the interest rate scare you. Just pay off the balance. If it is high interest, make sure you're paying it on time, and not being 30 days late, and you will still see a major benefit to that credit card. Now, different places that you can go to get credit cards. As you guys know, if you follow the channel, I'm always, dropping different credit cards that you can use to try to build credit. So you can check the building credit playlist that I have, and there's going to be a bunch of different options that are on there. But usually, for the sake of finding something that's going to report to at least two out of the three bureaus, that's not going to be a retail card, and that's going to be something good that you can use to get started in building credit. You don't always have to do a secured card. You can apply for unsecured cards even if you have challenge credit. Don't think that you have to do secured. Secured doesn't benefit your credit score any more than the unsecured. Secured is more so for the bank's sake because they don't trust you, because of where your credit score is. So they want you to put money up front that they can hold on to just in case you don't pay them back. So it's not to benefit you, and it does no extra boost to your credit report or credit score. So if you can get the unsecured option, go unsecured. If you're trying to build credit, there is one called the Destiny card. I believe, if I remember correctly, that they do have, if your credit score is like around 500 or so, they approve people around that range. They still have to look at your credit and everything, of course, to see if there's anything on it that they don't like. But they usually work with people around 500. If anybody has Navy Federal, I definitely recommend, using Navy Federal as well. Of course, you do have to have your score at a certain place in order to do that. And if you have access to Navy Federal, they have really good credit cards with good interest rates, even though it doesn't matter as much, but they have cards that you can probably use a little bit more on the long term. And definitely, like some of the cards that I've mentioned before on the channel, they may not be from like a traditional bank like a Chase or like a Regions or like Wells Fargo. But even though they're not attached to a just directly to a bank, there are different companies that use those banks to issue credit cards, and they give you actual more benefits even if you have challenged credit. Some of them don't even do a credit check. Some of them, like the fintech companies, they just look at your bank account information, and as long as you have good enough cash flow coming in your bank, it doesn't matter what your credit score is, you can get approved for something. Like I've done the Tomo card before, they're like that. And it's a few other cards that I have on there. The unicorn card. So there are different options that you can use. I think I forgot. I think it's Credit AI. That's what the unicorn card is that I was talking about, the metal card. So I have different options on the channel that you can definitely check out if you are trying to find some accounts that you need in order to build credit. But also remember and keep in mind, if you're trying to improve your credit score, building credit alone will not save you, especially not if you have collections on your credit report, if you have late payments on your credit report that are recent, like within the last year or so. If you have charge offs on your credit, like repos, if you have cell phone bills, um, if you have unpaid medical bills, if you have any of those things that are negative on your credit report, it will slow down your process of trying to improve your credit score. You cannot circumvent working on the negative items on your credit report by just going and get a credit card, paying it on time, and thinking that that's going to improve your score. And a lot of you guys might go to the dealership. I've heard people go to the dealership and they were told, "Hey, I know your credit's bad. Just get this car from us so I can get my commission check." They don't tell you that part. Just get this car from us, and then you pay on it for 6 months, and then come back and refinance it, and your credit should be better. Your credit is not going to be better if the things that had your credit low are still there when you go back to them 6 months from now. They're telling you the best thing they can tell you to give you confidence in getting the car and thinking that you'll come back with a better situation. I actually did a video where I go a little bit more in detail on why that doesn't really help you. But just know, and I'm gonna send you guys to that video after this one. But and that's gonna be on a replay. But just know that that will not help you. Building credit will not help you if you do not deal with those accounts. So you definitely have to deal with those accounts. So I thank you. I thank you guys for sticking around with me. I see a lot of you guys are still in here. I appreciate you guys, coming in here, and I see you guys commenting. Let me see if you guys have any questions um, on anything that I mentioned. Let me see. Let me see here. I got one credit card that only reports to one bureau. Okay, yeah. Which credit card is the best? Okay, I already mentioned that. Um, okay, if you have a question, I rise, I grind. What's that? COVID-19, will it help remove late payments? Okay, I believe that you're asking me if people will give you grace and remove a late payment just because of COVID-19. Correct me if that's not your question that you were asking, but I believe that's what you were saying, because it was a national disaster. But when it comes down to that, there are some companies that have actually, what they've done was they've basically just extended your time frame to be able to pay some stuff back. They might have put your credit card or your car loan or your personal loan on hold, and let you be able to skip a few payments or stuff like that. But I haven't seen where it has been very effective with people, using COVID-19 as a reason to get a late payment off their credit report. If so, it's very rare. I think I heard like one person say that they were able to do something like that, but usually they're gonna go ahead and give you the no. Because of that, they might work with you on fees. They might work with you on Like I said, you not being forced to make the payment for a certain amount of time. But as far as getting the late payments removed, more than likely you're gonna have to try a different way of trying to get the late payments removed, because they can be really funny about that. And usually they're gonna, if you call them, they're gonna tell you something like, "Oh, well, we have to report accurately to the credit bureaus, so we can't remove the late payment." But in that all actuality, they just tell using that like a scapegoat, because they really don't have to report anything to the credit bureaus. They report by choice. So, if they do report, they are supposed to report accurate information. But if they wanted to forgive you for it, they could. But most of the companies, unfortunately, they're just not really going to do that, because they don't have to. So, like I said, it usually is going to take a different means to try to deal with getting something like a late payment removed from your credit report. Now, let me see, does anybody else have any questions? Can I have a video about what credit card you recommend to build good credit? Okay, so if you go to the channel and you go to the playlist, and you go to the playlist that I have on building credit, I can't even tell you how many videos I have right there, but I have a bunch for trying to build credit. Actually, within last month, I know I did a video probably on the Destiny card, which is one that was really good for building credit. So if you look up the Destiny card video, or if you just go to my videos from last month, or if you go to the playlist, then you'll see that card. I label all of them on the thumbnails so that you'll know which ones are the best ones for trying to build credit, or for whatever the purpose the card might be good for. So definitely check that out, Max. Hopefully that answers your question. What other questions do we have in here? Um, what other questions do we have? Let's see here. Okay, looks like we don't have many other questions. I gave you guys, a minute just to see if any more of you guys have any other questions on anything before we wrap things up for the evening. I don't know what time zone you guys are in. I'm over here in Eastern time. Um, so it's about 9:30 over this way. I know it might be a little bit earlier for some of you guys, but you got one last question? Okay, go ahead and put your question in there. The option to buy credit lines still work? By buying credit lines, you're talking about buying trade lines. That's what you mean? Let me know. Just clarify that. I believe that's what you're talking about, but let me know. Okay, trade lines. Yep, that's what I thought. So, in regards to trade lines, you, I think there are still people out there that do it. As a matter of fact, there are people out there that do still sell trade lines. There has been a lot of cracking down that I've heard of happening on that, because it's not something that should really be done, as far as people selling trade lines and the whole way that works. But that's not the best option. It's not the best option for a few reasons. One, because you don't own the account. So I'm giving you guys a lot of tactics on what you can do to try to build credit, and different methods to try to build credit. But ideally, what you really want to be doing is you want to be changing the mindset that you have in regards to credit that led you to the point in the past, you know what I'm saying, that got your credit score to the point that it might be at right now. I posted earlier today, or it might have been yesterday, that if you improved your credit and you still have the same mentality, then that 500 credit score is going to come back and find you pretty soon. And that's because, and so what I'm trying to say is that it's very good to change the habits that we have that have led us to that we can't go into a new credit score still thinking the same way. Now, I say all that to say that if you get a trade line that you just paid money for, it's not going to really help you to change the habit, because you don't own the account. Somebody else owns the account, And what is happening is they're paying it on time. They have a low utilization. The credit card is probably old and stuff like that. So it does have a benefit in those regards, but it's not helping you to build the habit of paying things on time. So it's always going to be better for you to just try to get your own account and use that. Also, there are the people who you applying for credit with, they know that people do stuff like that. At one point, the mortgage lenders, they would not even count a credit card that showed authorized user on your credit report. They wouldn't even count that if it wasn't from a spouse or an immediate family member, because they know that. So they know that you're borrowing somebody else's good credit and that you haven't actually displayed good use of credit. So that's why they wouldn't count that. So it's important to keep that in mind. And like I said, there has been some things to arise legally in regards to people doing trade lines. So if I was you, I would stay away from that, and I would just go apply for an account, get it yourself, use it, pay it on time, and then reap the benefits of that. And you get more benefit from having your own primary trade line anyway. Hopefully that answers your question, and hopefully that helps. But you guys definitely want to be anything that you had going on with your credit. You definitely want to be correcting those behaviors behind it, because I don't want to just tell you guys just what to do to get to the better credit. I also want you guys to see that change in those habits that's going to help you guys to permanently never be in that situation again, where you never have to even think about needing to get your credit fixed, because you're already doing all the things that's going to keep your credit in a good place. And you can go and walk in any bank, get whatever you want to get, go get whatever car you want to get at a 2% interest rate. I'm pretty sure that would be ideal for most of you guys. And that's what I really want you guys to really have from the information that I'm providing to you guys. Now, does anybody else have any questions? Anybody else have any questions you guys want me to answer before I wrap things up? And if this information was helpful to you guys that are actually in here, can you guys put in the comments, just let me know if the information was good, if the information was helpful, if you want me to start going live a little bit more on some of these different topics, please let me know in the comments so that I can know that you guys got value from this, so I can do more stuff like this. And I'm just waiting to see if anybody else has any comments or any questions. All right, it's looking like everybody is already on point and on one accord with the information. That is good. That is good. I'm glad that you guys actually stuck with me through the live tonight, that you actually got this good information. Make sure if you didn't already hit the like button, to hit the like button. Make sure that you share this video with anybody that might need the information. Also, don't forget to go down in the description and get some of the helpful tools that I have available to you guys that might be struggling in some area trying to improve your credit. I have a bunch of stuff that can help you to actually get unstuck and see some change with your credit, or get some more progression in your efforts to try to improve your credit. So don't hesitate to go ahead and check that stuff out. But I appreciate this information. Was amazing. Thanks. You're welcome, Max. I appreciate you being here. But yeah, thank you guys for sticking through the live with me and collecting this good information that you can go back and share with others that you may know that need it. I'm gonna go ahead and wrap this up for the evening. Again, I appreciate you guys, and I will see you guys next time.